Hello guys, so this session is completely to make you understand about what kind of typical questions they ask you in an equity research profile or a financial modeling profile. So many people tend to come along me and they tend to ask me what type of questions they tend to ask in such kind of profiles. So there are many profiles like for which the people are aspiring for into the investment banking profiles or corporate banking profiles or corporate finance in general or asset management profiles. So I'll be trying to cover in a very broader way about what type of questions they can ask you in such type of corporate interviews. Right. So all the set of questions that we shall be discussing in the session for today shall be oriented towards financial modeling and valuation profiles or equity research profiles. So all kinds of questions they can ask you in such profiles. I'll be also trying to cover some of the profiles which shall be oriented towards a multi-asset investment specialist profile or simply an investment specialist profile in which I have personally worked as well. Also, if time permits, I'll be talking about the portfolio management profiles as well. But particularly, this session shall be completely oriented towards making you understand completely towards equity research and financial modeling and valuation. And again, for all of those who are interested to understand about all these techniques of investment banking, all these kinds of, I would say, the curriculum that we tend to learn in this investment banking can enroll for my 6-in-1 complete investment banking curriculum, which covers fundamental analysis, financial modeling and valuations, scientific analysis, portfolio management, strategies of investing, technical analysis, along with Excel, advanced Excel, VBA, macros, Power BI, Power Query, Tableau, placement training, interview training, soft skills training, communication training, and separate individualistic approach for different profiles of equity research, financial modeling, investment specialist profiles, portfolio management profiles, fixed income research profiles, derivative profiles, corporate finance profiles. You guys can find the link of the course in the description box. So I would really encourage people to join in the cohort, which gives you the complete practical understanding of all these things from a global balance. Because we believe in making you understand from a global perspective and not just Indian perspective, and trying to implement all those concepts practically at a very minimal cost, right? So that is one thing. So if I just come back to the topic for today, what type of questions or like what type of topics you need to know while going for an equity research profile or a financial modeling valuation profile? So one thing is the very basic crux or the very basic premise or the raw material is you should know how to create a financial model from the very basic to the most advanced. Some of the profiles or like some of the times people tend to say that even if we know basic financial modeling, we can go and try to clear up the interviews. It might happen that you clear up those interviews. But when you land into the actual job profile, the things or circumstances or the practical situations that will come in front of you that will really create a kind of a hurdle or a pause in your growth. Because in many of the companies, the process might be very simple. They might just give you a simple financial model to create. They might give you some empty box or empty blanks in an Excel that you might have to fill in 30 minutes to 1 hour. They might ask you a simple set of questions and make you as a equity research analyst. But when you land into that actual job profile, you step into the shoes of an equity research analyst or a financial modeler doing valuation. The practical scenarios, the macro environment, the different type of companies and the intricacies which affect those companies and affect your valuation multiples makes a big hurdle for you because you do not know the things practically and you do not know how to apply those concepts in the practical world. So that is one thing. But many of the multinational investment banking firms or top large investment banking companies like JP Morgan Chase and Company, Morgan Stanley, Goldman Sachs, HSBC, Citibank, BNP Paribas, D Shaw, BlackRock, or like some kind of consulting firms with this financial modeling and valuation might be used. They grill you to the each and every limit. So we need to know about all these things practically from the very basic to the most advanced level. So one thing is, the one first thing is that we always need to remember is, or we need to have a push start is towards knowing how to create a financial model. Not only creating a financial modeling on Excel, how to translate that financial model into an equity research report, which comprises at least 70 to 80% of fundamentals and remaining like 20 to 30% of technicals, right? And that is why technical analysis is very important. So if you know how to create a financial model, because some of the times they tend to ask you that what are the basic assumptions while creating a financial model. So you should know how to forecast revenues, how to forecast expenses by using different methods. Expenses being a much simpler, but if we talk about revenues, there are multiple methods to forecast revenues. multiple methods to forecast revenue: simple average method, moving average method, simply taking averages using the ln function, and most importantly, regression. How to use regression in forecasting the revenues for a company, volume and price analysis, seasonality factors. So there are different ways for different companies, or as per different situations, how will you forecast the revenues for a company? Very popularly asked question, right? In the assumption aspect. If a company has declining revenues, how will you forecast the revenues? Will you decline the revenues in the subsequent years or increase the revenues in the subsequent years? You need to have a logic for that. It's not only just you are taking the past premises based upon the past assumptions, you are trying to forecast the company's futures or some other financials, but the management commentary also plays a greater look. It might happen that the past financials or past historical performance might indicate some different thing or some different trajectory for that company in future versus the management commentary. In that case, you have to listen to the management commentary, because the management of the company is the greatest research analyst for his or her company. People working as analysts are secondary, but a management who is commenting upon the revenue guidance of its cash flows, its revenues, maybe in terms of expenses or some other kind of investment opportunities for that business. He's the biggest equity research analyst for his company. He's the biggest fixed income research analyst for his company, right? So in that case, we shall be not being giving consideration to the past performance or the past numbers or the past trend of a company, and looking forward towards the management commentary, because most of the times on a quarterly basis or annual basis, we tend to listen to the management when they say that we expect a single digit revenue guidance, a 10% revenue guidance, higher double digit, lower double digit, higher single digit, lower single digit. All these numbers can be translated towards your forecasting, and how to translate it based upon management commentary, macro outlook, and practical scenarios is something we need to understand. Because many of the instances, what happens, we tend to learn just to create a financial model for the hypothetical companies, the companies that don't even exist. In many of the curriculums, you just have the balance sheet of a company, P&L and cash flows, hypothetical numbers, very simple scenarios. And just basis upon those hypothetical numbers in the balance sheet or profit and loss and cash flows, you tend to forecast the company's financials. Different ways to forecast, different YouTubers, different courses are telling you the different ways to forecast. But that's the most simplest way. Hypothetical companies, anyone can value. Anyone can use a DCF method of valuation or the discounted cash flow method of valuation to project a company's future, and then calculate the enterprise value from that equity value, and tend to know that whether your share is undervalued or overvalued vis-a-vis the current market price of a share. But when complicacies or the complexities comes into place, loss-making companies, companies having declining revenues, companies having declining profits or going towards a loss trajectory, how will you value such companies? Because based upon past premises is one thing, but management commentary and management outlook is also one thing. How will you forecast the future revenues or the future financials of a company which has no comparables? And so all these things are very important. So learn about the financial modeling. And you cannot know about financial modeling until and unless you do not know about the DCF method of valuation. Discounted cash flow method of valuation is very important. Learn about the discounted cash flow method of valuation. How do we forecast the cash flows of a firm? What is the free cash flow to firm? How is the free cash flow to firm different from the free cash flow to equity? A very popular interview questions. Apart from asking you how to create a financial model and what are the different assumptions of a financial model, they tend to ask you what's the difference between the free cash flow to firm and the free cash flow to equity. How do you discount the free cash flow to firm? Right? By the cost of capital, which tends to encapsulate both the cost of equity and cost of debt. Also, how to discount the free cash flow to equity? Of course, by using the cost of equity. How to calculate the weighted average cost of capital or the overall cost of capital or the cost of capital. All the three mean the same. Within that, how do you calculate cost of debt? How do you calculate cost of equity? Cost of equity, very popularly being calculated by using the CAPM model, which stands for the Capital Asset Pricing Model. What is the risk-free rate? How do you adjust the risk-free rate? Many of the analysts in their equity research models or financial models are just using a risk-free rate, a plain vanilla risk-free rate. They're not adjusting the risk-free rate as per the default spread, right? You need to adjust the cost of debt also as per the default spread. You need to adjust the equity risk premium also, right? With by adding or subtracting the default spread, right? So usually in case of a risk-free rate, we tend to subtract it. In case of an equity risk premium, we tend to add it, we need to adjust it. Again, different ways to calculate the risk-free rate, different ways to calculate the default spread, different ways to calculate the equity risk premium, beta, levered beta, which has the component of debt, also called as the equity beta, unlevered beta or the asset beta, which ignores the impact of debt, how to relever the beta. The management commentary might say that our debt to equity as of now is this much, and we expect to cut down the cut down debt, which will translate to a lower debt to equity ratio in the subsequent years. So how will you unlever your beta, which has the impact of the current debt? You have to ignore the impact of current debt or remove the impact of current debt and add the impact of the potential forecasted debt to equity in your beta, which the management has stated. How will you do that? Right? All kinds of things they tend to ask you. So FCFF, FCFE, levered beta, cost of equity, cost of debt, cost of capital, CAPM model. Very popularly, they ask about the different schedules you tend to create in a financial modeling Excel. You talk about depreciation schedule, loan amortization schedules, right? Working capital schedules. So very popularly asked, how do you create such schedules? What are the schedules? All these things they tend to ask you. How do you treat deferred tax assets and deferred tax liabilities? A few of the things which either sometimes the analysts tend to prefer to keep them constant, कि जो पिछले साल में number है वही same करते रहो, or there are like multiple ways to have a ponder over it or have a thought over it. So deferred tax assets and deferred tax liabilities, reserves, provisions, contingent liabilities, all these things are very complicated to forecast, right? You might not have a correct assumption for that because many people have different assumptions. But how can you incorporate the impact of these numbers based upon past numbers, right? So all these things we need to know the treatment of these things. Correct, short-term provisions, long-term provisions is one thing. Learn about all types of valuation models. So DCF modeling being the main one. Learn about the relative valuation method, though I personally call it as the method of relative pricing, right? Because valuation is something where you tend to forecast the company's cash flows and tend to discount it and get the enterprise value, right? And then subtract your debt, add back cash, and get the equity value, and then divide by the outstanding shares. You get the equity value per share, right? But in case of relative valuation, we are trying to assign a multiple to our company based upon some other company's valuation. So that's not valuation, it's pricing, right? तुम कंपनीज के फाइनेंशियल्स को या फंडामेंटल्स को देख के तुम कंपनी को वैल्यू नहीं कर रहे हो. You're just trying to price a company relative to the valuation of the other company or related to the pricing of the other company. So learn about the different pricing multiples or the valuation multiples per se, as you might call it, price to earning, price earning growth ratio. They tend to ask about the different valuation multiples. So what's the difference between the price earning ratio and the price earning growth ratio? When do we use the price earning ratio? When is the price earning ratio not good? What is the relationship of the price earning ratio and the price earning growth ratio with the interest rate, risk and growth? What is the price to book value ratio? What is the EV to EBITDA ratio? What is the adjusted EBITDA? Right? What is EV to sales? What is price to sales? Right? What is price to cash flow? What is EV by cash flow? Right? Debt by EBITDA, debt by EBITDA, sales to capital, right? All these things they tend to ask you. So for banking industries, BFSI space, heavy industries, like whether we use the price to book value or the price to earning ratio, of course, the price to book value ratio. When to use EV to EBITDA, when to use EV to sales, when to use price to sales, EV by free cash flows, right? You have your debt by EBITDA, debt by free cash flows, or sales by capital. All these things are very important to understand from a valuation or a pricing perspective, when to use them, how to calculate an adjusted EPS, difference between your basic EPS and diluted EPS. When can they same? When can they be different? All kinds of financial ratios you need to know, starting from liquidity to activity, efficiency, capital structure, valuations. Every kind of ratio you need to know that to find on moneycontrol.com or not on moneycontrol.com practically. You should know to learn, read, analyze the annual report of a company in detail from A to Z. What is a balance sheet? Each and every component of balance sheet. What's a profit and loss statement? Each and every component of a profit and loss statement. What's a cash flow? Each and every component of a cash flow statement. Statement of equities we tend to ignore. वो भी पढ़ना है. Comprehensive income भी पढ़ना है. Notes to accounts भी पढ़ना है. Management discussion analysis section. Auditors report. Different graphics and valuation criteria and ratios that they tend to calculate in an annual report. All these things you need to know conceptually, practically, right? Sometimes in most of the interviews nowadays, they have tend to given you They tend to give you an Excel file which you have to solve in 1 hour. They tend to mail you. There are some multiple blank spaces in that. I've shared multiple files in my own curriculum also, right? In my own investment banking curriculum, I've exactly shared the test of different companies' Excel test of financial modeling and valuations of JP Morgan, of Equity Research, right, of DSP, of Parag Parekh, of Goldman Sachs, how they tend to give you the questions. Exactly same have been replicated in that curriculum. So again, if you're interested, you can go for that. So these types of questions they tend to ask you, these type of Excel files they tend to give you. So advanced Excel is very crucial. Every function in Excel you need to know because financial modeling also requires a specific set of functions to forecast the company's financials. Again, that is also very crucial. So all these valuation metrics, apart from that, I might be skipping a few of the metrics, right? But all these kinds of valuation metrics or pricing metrics is something you need to know. How to value different types of companies, how to value the FMCGs, because mostly what happens, all these spaces are valued in a similar way, apart from the BFSI space or the oil and gas companies. Because the BFSI space have different metrics of calculations. In banking, you have different ratios. In NBFCs, you have different ratios. In insurance space, you have different ratios. In brokerage, asset management companies, you have different ratios, right? There might be some differences in ratios of pharma, of IT, of healthcare, right? But broadly, most of the sectors are valued based upon same ratios, based upon same valuation multiples or same basic financial ratios. But there are some sectors in which some additional ratios are used apart from the previous other ratios. Like the BFSI space is completely different. Additionally, some ratios are used in pharma, in IT, like EV per hospital bed, revenue per hospital bed, subcontract by sales, deal to win, like book to build in the capital goods ratios, like book to build, we tend to call it. In insurance, we're using embedded value, persistency ratio, combined ratio, right? You are using a VNB margin, right? You are using in your banking space, so net interest margin, capital adequacy ratios, provisions, your basically the credit to deposits, correct? And your natural gas, oil, and the mining, the companies for minings are again different. The natural resource companies, you tend to use a method which is called as adjusted net present value method to value such companies because you always have an option to postpone the investments based upon the fruitful results, right? So natural resource, again, they're valued per barrels, right? Per your how many extraction resources are available to extract the oil and gas, the proven reserves and probable reserves. Jahan say you can try to extract your gas, your oiling and different capacities, again, based upon different multiples, correct? So different multiples evaluations that is very popular method to value such companies or oil mining and metal and natural resource mining companies is your options method. You tend to use a strike price, a spot price, dividend yield, interest rate, and volatility, right, to calculate to ascertain the valuation of such companies. Again, that is very important. That's called the options method. It's also called as the contingent claims method, right? So both of them are same, be it the options method or the contingent claim methods, right? Because again, you are claiming your investment or claiming the valuations based upon the macro factors or when the investment is productive or it is fruitful for you to go into. Correct. So all these methods you should know. Asset-based valuation people tend to talk about, but asset-based valuation is not a different method. Ideally, as per my understanding, we just have three methods of valuation. One is your discounted cash flow method. Second one is the relative pricing or valuation, as you may call it. And the third one is the contingent claim or the options method. Sometimes they tend to bifurcate that into the asset-based method, and the asset-based method gets bifurcated into the present value, the net present value, the liquidation method, right? But the asset-based method is something which can be both a DCF method or an RV method. Because asset-based method may when you are calculating the future cash flows that the asset can generate for you, and then you tend to discount those future cash flows, it becomes a DCF asset-based valuation. But when you're using an EV to EBITDA multiple or a EV to sales multiple or a price to book value multiple in an asset-based approach, it tends to become the RV method, right? So broadly, you have just three categories and within which you can have different multiples. Like even in the case of the liquidation methods or replacement cost, we tend to value the companies based upon if the assets gets liquidated or if some similar asset comes into place in case of replacement. Again, you are assigning a multiple to that based upon price to book value, price to earning, price to sales. Again, that's a part of the RV method or the relative valuation method. So broadly, तीन ही है DCF, you have the RV method, which is also called as your relative valuation method, and the options method, also called as the contingent claims method. The method तो बस तीन ही है, ठीक है? Like within which you have the multiple bifurcations, just like multiple books come into place. Some books they tend to categorize DCF separately, asset base separately, liquidation separately, or replacement cost separately, present value separately. Because in the DCF, you are anyways calculating the present value only. And even the adjusted net present value, for you guys who know it already, like which is being used for such kind of oil and gas investments, again comes under the broader purview of the DCF method only. Right. So that is one thing, but there are some kinds of nuances or like some kinds of intricacies like to know the same. So ये सब चीजें you should know about the global markets, what's happening in the global markets, because many of the mistake which many of the fresh blood in the organizations or fresh equity research aspiring analysts are doing it, they're just learning about the Indian markets. Why Nifty crashed, why Nifty rose, how many sectors, how many stock, Nifty small cap, mid cap, the macros affecting the Indian markets, Indian PMI, Indian inflation, Indian CMI, CPI, Indian IMI. They just know about the Indian macros. But you need to know about the global macros. What's happening in US, what's happening in Europe, what's happening in Switzerland, what's happening in Germany, what's happening in France, right? Because all these things tend to impact the global valuations, the global multiples, and also have an impact upon the emerging markets. What's happening in the various kinds of developed markets, be it Germany, be it UK, as we like just discussed, Switzerland, right? Um, Talking about France, we talked about like many kind of emerging market apart from India, right? Korea and Brazil being down by like 25%, 30% as of date. Why is Taiwan rising? Why is China rising? Indonesia rising? South Africa rising? Malaysia, Indonesia, we have to know what's happening in these countries. Mexico, especially Mexico, Canada, like on account of tariff implications. In some countries, ka CPI, GDP growth rate, right? IMI, their interest rates, inflations, because all these things tend to impact the other markets also, especially Japan as well, right? In the case of developed economies, because all these things tend to impact the other economies. We cannot stay in isolation for long, correct? So that is one thing. So learn about all these economies from a global parlance. Start watching different online news platforms like CNBC, Global CNBC TV 18, Bloomberg TV, NDTV Profit, Z Business, right? Business Today, ET Now. Try watching their YouTube videos, all these kinds of stuff. Try reading multiple business articles, follow multiple people online via YouTube, via different things. Try to understand their podcast. Go via different podcasts, different news platforms. You'll try to understand कि क्या हो रहा है market में. Because the way the management of the company's talk, or the equity research analyst or the senior management analyst talks about a firm, you will get to know how they talk to the news, how they talk to the news anchors, how they explain the multiples. कुछ समझ नहीं आ रहा, pause करो, go to Google, right, and find the meaning. All these things will really make you much more confident. Ideally, what has to be done. So that is one thing. And I will really suggest everyone to go through this video again and again, right? I'll be publishing a set of questions as well, directly what they tend to ask as well, straightforward questions. But if you learn about all these things like which are discussed in this session, you're very well good to go for an equity research profile or a financial modeling profile. It will also help you in an investment specialist profile and somewhat 20-30% towards a portfolio management profile as well. Though like we shall be discussing about these profiles later, but ये सब कर लो, Excel, Tableau, Power BI सीख लो. Again, that is very important. And again, if you're interested to have a full cohort to learn about fundamental analysis, financial modeling valuations, technical analysis, scientific analysis, strategies of investing, portfolio management, Excel, advanced Excel, VBA, macros, Tableau, Power BI, Power Query, SQL, interview training, placement training, communication skills, to have daily content, daily global market content from a global perspective, and all these things like which I talked about from a global perspective, how to analyze global markets, how to prepare an equity research model for the BFSI space, natural gas space, all these valuation methods for the global companies. You can feel free to join our cohort, right? So again, it's a 6 to 7 months cohort, and we tend to extend it to like 10 months, 12 months, like based upon the understanding, based upon Q&A. It's a one-time fee which the students tend to pay. And once they learn everything, we take multiple placement mocks for them for different profiles, like so that they can prepare themselves. There's no upper limit for the mocks, endless mocks, let the student feels comfortable. And even if the first batch is over, he can join the other batches because new batches will come up with the new learnings, right? He can join in at no extra fee. It's a one-time fee for everybody. Watch endless modules and go for live lectures on weekends. On Saturdays and Sundays, we keep live lectures to watch live lectures to make you understand such things. Right, so that is one thing. So I would insist everyone to share this free equity research financial modeling profiles learning session video, how to like prepare yourself for such things and what to do and what not to do, basically what to do, because everything you have to do anyways. Share this video as far as you can. I would really request everybody to share this video to their friends, to their families and relatives in multiple colleges, different batches, seniors, juniors, joint batchmates, so that they can have a free guidance कि exactly करना क्या है in these equity research profiles and financial modeling profiles में. And really, I would insist everyone to subscribe to the YouTube channel and press the bell icon for the continuous updates, because subscribing the YouTube channel and pressing the bell icon is very crucial, because the quality of the content जो हम यहाँ provide करने की कोशिश कर रहे हैं, you will find nowhere. On many of the platforms, you might have creative content with creative visuals, with creative PPT, some kinds of AIs, which makes the content much more lucrative. बट अगर प्रैक्टिकली चीज़ों को समझना है बेसिक से एडवांस में, बहुत ही सिंपल भाषा में, बीट इंग्लिश और हिंदी, बिकॉज आई टेंड टू कम्युनिकेट वाया बोथ दी लैंग्वेजेस, देन लाइक दिस इज द प्लेटफॉर्म, बिकॉज वी आर ट्राइंग टू ब्रिंग अप द बेस्ट क्वालिटी. जो चीज़ें पीपल आर पेइंग इन थाउजेंड्स एंड लैक्स, ऑल दैट कंटेंट इज बीइंग पोस्टेड हियर ऑन यूट्यूब. तो जो भी यहाँ पे पोस्ट हो रहा है उसकी वैल्यू करो, सीखो, ज़्यादा से ज़्यादा शेयर करो ताकि ज़्यादा लोग जाने कि क्या कंटेंट आ रहा है. इफ यू वांट समथिंग विच आई कैन improve अपॉन, लेट मी नो इन द कमेंट बॉक्स, डेफिनेटली करेंगे. कोई टॉपिक यू वांट टू अंडरस्टैंड स्पेसिफिकली इन द फील्ड ऑफ इन्वेस्टमेंट बैंकिंग और कंसल्टिंग, लेट मी नो, मैं खुद से बताऊंगा. कुछ और एक्सपर्ट्स चाहिए, लाइक मे बी इन द डिफरेंट फील्ड्स, एक्सपर्ट्स को भी लाऊंगा, राइट? सो अगेन दैट थिंग्स कैन बी डन. सो स्टे वेल, स्टे हाइड्रेटेड, take care of yourself, and again I would request everyone to subscribe to the channel and press the bell icon for continuous valued updates. Thank you so much, guys. See you soon.